All right, everybody. Thanks. Oh. All right, there was an echo. Thanks for sticking around. Let's go through what happened this morning in Spotlight. And we'll start with the Russell. All right, so looking for our 8:30 start time, Central Exchange Time, Central Standard Time. 8:36. First trade of the morning. It comes down, hits its money management and full target, and it is one and done. Goals reached, 2.7 points. $135 per contract. And then the trailer, which is here at 1565.1. So the question is, do you stop out of your trailer at the long entry, or do you make your adjustment? And I don't know that there's a right or wrong answer. It's just a matter of doing it the same way every time. So if you stop out at your entry or a little adjustment, you know, that's a difference maker because it may keep you in the trade. If you were to adjust that up from 0.7, 2 ticks up would be 0.9, key level adjust is 0.1. You just keep your stop at the pink dots here and you stay in the trade, and it pushes down even lower, you see? So let's see, it closes below, then it closes above. Yeah, so that stop holds, and then when it closes down below here again, well, you could say that when it closed below, the stop could move to 1564.2. So really, I mean, maybe you're stopping out right there at 0.2 because it does close below the signal line unless you kept your stop where it was. So this is where technique just comes in, but we'll just say that trade finished. Did go down further if anyone stayed in the trade. Would have stopped out down in here. But a nice trade to start the session. A lot different than how Counterpunch turned out, that's for sure. The Spotlight doesn't try to catch every move, right? Spotlight's looking for completely different things. Counterpunch, it's all based on the relationship of the exhaustion dots to the ones prior. Spotlight doesn't care about that. It's looking for something completely different. All right, so 9 o'clock start time this morning with crude, and we saw that if we got the trade right, it was one and done on Counterpunch. We don't get in sync with crude, though. So here's the case where you have to decide if you're going to adjust around the little spike below you or not. So the short's at 98. You have a spike there at 96. That's a 3-tick adjustment. A 3-tick adjustment on a small trade. And whether you do it or not do it, I don't know. But I'm just going to assume that's a losing trade because I don't know a 3-tick adjustment on a small trade like that. I'm not typically going to make that adjustment. Some of you might. So that one loses. And then another trade here. And that one flips over to long, unfortunately. It's from 22, well, to 20, no, from 12 to 16. And it hits 16. So we saw the rocky start on crude, and then it flips to short again. And so this is just tough because you end up with 3 losing trades in a row before you get a winner. And then you finally do get a winner, but it's really small. It's only 10 ticks. Then you have another trade here, and that one is a winner also, a nice winner. And so 3 losses, 2 winners, and it recovers. I don't know if it recovers completely, but it took 5 trades. And if you're going to take a 6th trade, you're kind of pushing it because you're getting close. You're within 30 minutes to the crude oil report, which technically you could still take that trade. But remember, with range bars, it could take a long time. And I don't really like to trade with this chart once I get within that, 25, 30 minutes close to the report, because for one thing, the report is really where we make our money on Wednesdays, and secondly, because with range bars, You just don't know how long you're going to have to stay in that trade. You might have to bail out as you get closer to the report. It would have ended up winning, but that's a super small trade. You have to go to target 4. And when it finally hits target 4, yeah, I mean, it only took a few minutes. But I'm just saying, I don't know how you guys like to handle this or not. I'm just kind of telling you what I personally observed. So anyway, then we get into the report. Definitely some winners, you know. I mean, did crude recover 100%? We'd have to do the math, but it ended up doing pretty darn good. So as we get closer to the report, we already talked about how it gets in sync right here. So you wait your 2 minutes, and once you're in 2 minutes, it's already below the entry. Did it stab up and hit in here? I wasn't watching. I was watching the counterpunch chart, but it did come up and hit it here. Remember, money management is where that little pinprick is, right there. Never hits money management. That's why we have the 10 tick minimum. It has to get to target 1 and go 10 ticks. That's the reason for that, because sometimes a trade needs time to develop, and you don't want to get stopped out too early. This is a great example of that, because if you're just going with target 1, you get stopped out and you miss the move, or you hit money management and you can no longer get in sync and you still miss the move. But with our 10 tick requirement, it gives the trade more room to develop. And that's the reason for that. It's a good example of why we use that 10 tick minimum instead of the default 8 ticks. Again, though, if for whatever reason you missed it, maybe you took the blue trade instead, and that was also a very nice trade. So really good result regardless. Barbara, I saw you typing something, so feel free to ask what's ever on your mind. Anyone else too? Yeah, okay, very good. So when you say how do you show the calc, the calculator is what prints the dots on the chart. Is that what you mean, or are you referring to the data window? Just want to make sure that we got the semantics right. Yeah, so if you're in TradeStation, there's a little button up here you could push that looks like a calculator. It's called Data Window. You could also go to View, Data Window, and you could also do Control-Shift-D. And if you're in NinjaTrader, I believe it's also Control-D, right? John, is it Control-D? I'm sure it's in the View menu. Yeah, Control-D. So the trick is with Ninja, when you click on a chart, you have to then hit the Alt key to freeze it. Otherwise, it's just going to keep following your mouse. So if you're in Ninja and you see a trade like this yellow trade, you click on it, the data pops up in your data window, then you want to tap your Alt key so that it freezes the data so that when you move your mouse around, the trade still remains. All right, so that's a little technique you have to learn with Ninja. You can go ahead and give that a try. So just remember, the calculator itself is what puts the dots on the chart. And if you hover your mouse over one of the targets, for example, and you left click twice, click, click, it'll open up the calculator. And that's where all the inputs are and how you configure it and do stuff to it. That's the indicator, the SL calc, or maybe for you it's the SPT calc, depending on what level you came in as. But the data window itself is what displays the calc. And it displays the data on every single bar, whatever bar you click on. And it's the axis of the trade itself, the initial setup, is where when you click on that, you get the full trade. Just remember, you got to click the Alt key on your keyboard to freeze it. So the data doesn't just keep following your mouse from bar to bar to bar to bar as you move your mouse. Okay? Good question. All right, the YM. Not a lot of bars on the YM. I mean, think of how long this session has been so far, and you practically see the entire morning in just one window. So real slow. 8:30 start time, so that green trade, I mean, if you're getting in sync, you could take it, but if you're waiting for a fresh setup, you take the next one. And it gets short, and it's targeting 760, and it gets as low as 765. It misses its target by 5 points and then comes up and stops out for a partial profit. Unless you're using the tricks that we typically do, and you're leaving the stop above the 50 moving average by a tick. So we use the 50 and the 200 moving averages, especially when they're intertwined, to mark support and resistance, and you can make a little adjustment and keep your stop there. And if you do that, you stay in the trade, and then it pushes all the way down and misses full target by 1 tick. And that's enough for power of quitting. You just take a partial profit, but if you miss a full target by 1 tick, that counts as power of quitting, right? So I point this little adjustment out because that's just like adjusting around a spike on a bar by a tick or two. You want to try to hide your stops and your entries around the obvious support and resistance levels that the price action is showing you. This is, again, the dancing with the market, letting the market and the price action speak to you. So if you got to stop at 92 and you got a 50 moving average at 93, you can leave your stop up here at either 94 or even as high as 96. It's still a free trade. In my opinion, who cares about a couple ticks when you're trying to give that trade the room it needs to get to its full target? Those are what we call the 5% art to trading. We try to reduce it down to 1% art because the other 4% we can make little rules. And one of those rules is it's okay to make a 1 or 2 tick adjustment on stops and entries. Sometimes 3, rarely 4. That's kind of the thing to go through when you're thinking it through. It's okay to make a 1 or 2 tick adjustment, sometimes 3, rarely 4. And if you just kind of use that, it'll guide you and you'll learn how to stay in trades and let the price action kind of dictate to you. Let it dance, let it lead the dance, and you follow. Otherwise, that next trade would have been a loss, and then the next trade would have been a break even, and you're still kind of fighting the fight. Any questions on that? Those are important concepts. Does take practice. One thing to think about, most people don't think about this, is that there's no substitute for time and experience. You learn this over time. It's okay if you don't know this right away. It's okay if it's got you kind of scratching your head going, huh? What? That's okay. That's normal. It's also normal to consider that you'll be better at something 6 months from now than 6 weeks from now. You have to allow yourself the opportunity to learn and grow as you hear these things over and over and get repetition and get experience. And that's the beauty of pre-production and learning how to do it first with your money safe on the sidelines. Stick with the success guide. All right, so then we got the NQ, and we saw how the 610 tick was just really crappy on counterpunch. This is a 4-point momentum bar, a 16 tick range bar on Ninja. So you got a short at 835, and it hangs in there. That stop well placed. It pushes through target 1. The stop moves lower, lower still. It bangs through target 2. Hits a perfect target 3. It's a one and done trade and another successful session. So as garbage as the price action was that we saw on counterpunch, Spotlight is really handling it well so far, if you think about it. Hopefully you guys are all in agreement with that. We saw what happened on unleaded gas. Let's see what happened at the early part of the session. Starts at 9. There's a short right there, right at 9. Possible stop and reverse. I think with unleaded gas, you might need more than just 2 ticks for a stop and reverse. John, I don't know what you use. I think 4 ticks is still less than 2 ticks on crude oil. So, you know, you want to try to stay short. 11, it stabs up to 77.11. So even a 2-tick adjustment keeps you short. But it ultimately gets through. And then it, you know, stops and reverses again. Does it? Let's see. 06, if you make a 4-tick adjustment, it gets down to 04. That's only 2 ticks. And then it would have stopped out. So it's dicey in here. This is tough. You know, range bars can be tricky when there's no range. And ultimately it gets short and picks up a partial profit. But this is it's a messy market until the winter after the crude report. So that's the first losing session we've seen so far this morning. Unleaded gas. Yeah, 4 ticks. Okay, I would think that's a pretty decent number. All right, then with our Forex charts, these look totally different than Spotlight because these are momentum bars. So Lola, let's take a look and see what happened. Start at 8:30. You have to watch out for the red labeled news events. If there is one, you're going to have to wait a few minutes. You can get in sync. Here we are at 8:32. That's your first trade of the day on the euro yen. And remember, we only want to take a target that's 10 pips or more. And if we hit a 10 pip target, that is the minimum power of quitting goal. Obviously, we want more, but that's the minimum we'll accept. And target 1 is 11 pips. And it stabs up and hits it perfectly. And then it comes down and stops out, and that's the end of that trade. But it is one and done. It is power of quitting. It did hit its minimum goals today. And it took about 15 minutes. 15 minutes to get 11 pips on the euro yen. The other trades don't matter. Power of quitting has you out of the market. Yeah, so, you know, maybe you get in sync with it a few bars later. If there's a red label report, I mean, you got all these different bars up to 8 minutes later, basically, to still be able to get in sync. All right, then the pound Aussie. So the pound Aussie, a lot more movement this morning than the euro yen. 8:30, here's your first trade right there at 8:58. 86.69. Just looking to see if I want to adjust around that spike to the left, that little swing level. And that's a tough one because, again, from 69, you'd have to go down to 65. That's a 4-pip adjustment. I mean, to me, that's too much. 1 or 2 pips, sometimes 3, rarely 4. I'm not just going to make a 4-pip adjustment unless I got like a real compelling reason or more than one reason. So win or lose, I think that's the right place to get in. 1 pip off the key level maybe, and it's going to end up losing. I believe it flips to long at 91. And it hits 91 right there. Again, do you adjust around that spike? I don't know. Regardless, it's a nice winner. So if you adjust the yellow trade, you stay out of a losing trade. I personally think it's a bad habit to make big adjustments all the time. in the end, I don't think it pays off. Small adjustments, not, and what's small, like I said, 1 or 2 ticks, in this case pips, sometimes 3, rarely 4. If you're going to do 4, you need like some major key levels to work around. I don't know. That's where you work that out in your trade planning. But I don't think you need to make adjustments too big because support and resistance levels are broken all the time anyway. And just because it breaks through an adjusted entry doesn't mean it won't turn around and lose anyway. You could adjust it 4 pips, get it below that level, it triggers in and still goes up and loses, right? All those things are possible, and they will happen. And that's why you have to rely on your trades and rely on your trade plan rules and just go with it. And you can't worry about a trade losing. This trade loses, but it produces a big winner to follow. And 2 trades gives you power of quitting. That's perfectly acceptable. 17, 26, and 36 pips and a nice trailer. And a trailer with a little adjustment around the spike right there, that's a good case of the 1 and 2 tick adjustment, keeps you in that trade for a much bigger move, hitting target 4 and then stopping out way up here. See that? So a nice session, and the only losing session today was the early part of unleaded gas. Everything else at power of quitting. Maybe the YM if you didn't adjust around the 50 moving average, but if you didn't, in my opinion, that's a mistake because that's just something we always do. So learn from that. And that's all she wrote. Any questions? You're welcome. A lot of you are brand new to Spotlight. I see some names of people I've been corresponding with over this last week or so. Just want to say hello to you. Thanks for coming. I want this to be a fulfilling and successful experience for you. I want the trade room to work for you as well. The trade room is here for you to learn. This is where you get live in the market, real-time exposure to the strategies. But in the end, you have to make it your own. I can't encourage you enough to go through the Steps to Success guide because there's learning the strategy, but there's also learning how to be just a successful trader and what that means, and then marrying the two together. Anyone can learn technique. Anyone can paint by numbers. That's what learning the strategy is. It's just technique. It's easy to learn. Some repetition, some practice, you learn it. But that's not going to make you a successful trader. It's just going to teach you how to use a really great tool. And I always like to use the metaphor of the hydraulic nail gun, which is a really great tool to build a house with. My father is an old school carpenter who still swings a hammer, or at least he did before he retired. And the young kids came around with the high-powered nail guns, and basically he could no longer compete with that, right? So the high-powered tools, really, really good. Great for that business, unless you don't take the time to learn how to use it properly. And then you end up with a nail sticking out of your big toe, or worse. Think of this as a hydraulic nail gun. You have to learn how to use it the way it's intended to be used properly so that you can become a successful trader. The end result is becoming a successful trader. The tool is no good if that also is not part of what you are working on, practicing, learning, and training on. That is your Steps to Success guide. So you don't want to take that lightly. The success from this strategy will come from your pre-production work. Getting the proof of concept first. And it's all in the Steps to Success guide. All the steps. Don't skip steps. Because when you get that proof of concept, the actual measurable results that will build that foundation for you to build your trading business on, you will be in the strongest position for success. And you will have elevated above the trees so that you could look down on it from above. Just think about that. Every trade is a tree in your forest, but your equity curve is your forest. You don't want to be stuck in the trees without any concept of your forest. Those are the little grunts running around trying to avoid losing trades, trying not to get crushed by some falling trees, but they have no point of view as to whether the equity will go up or down if they just trade a trade plan that they could prove, right? Because they haven't proven it to themselves yet. You don't want to be that person, especially when we've got the tools to do everything with our capital in a safe place. We don't have to put it at risk until we're ready. And you'll know when you're ready if you go through those steps. There's such a powerful thing, that proof of concept. Because you prove it to yourself so you can believe in it. Because every trade you take is at the right edge of the chart. This is why engineers have so much trouble. They can't control what happens next. Engineers tend to look backwards and try to fix stuff that already happened. That is futile. It is a waste of time and will end up in disappointment. Trading is looking off into the black to the right where you don't know what's happening next. So you have to lean on the odds. You have to lean on your smart money management, your ability to execute, and the foundation that you've built that gives you the belief that the trade plan will grow your equity if you just stick with it, even if it means sacrificing a third of the trees in your forest, because your forest will grow 2/3 larger as a result. It's really that simple. Sounds like Mother Goose. And that's, again, why some people struggle with it. You don't have to make it harder than it is. Stick with the simple concepts. All right, so that's it for me. I hope you guys enjoyed the session. Give you one last chance to ask any questions that are on your mind. Please keep in mind that John will be in here tomorrow. He handles Tuesdays and Thursdays. He uses NinjaTrader. He knows a heck of a lot more about Ninja than I do. He's the guy you want to ask Ninja questions to. I'll be back here on Monday. I do have some travel plans kind of sporadically throughout the month, but John will cover certain days for me. And I'll also do a day while I'm traveling. I'm the Backpack Trader, guys. Have you seen that blog, backpacktrader.com? I'm waiting for some of you to kind of post places you've traded in the places I've traded section. All right, everybody. Have a great day. See you next time.